Yes, indeed, this indicator is capable of predicting the near future. At first glance, this may seem like something excellent, something that will make us a lot of money. But of course, we have to realize that this indicator simply replicates a series of fractals and parameters that have already occurred in the past, specifically in its previous structures. We are going to explain this topic because it has become very viral on social networks to use this type of indicator, which combined with other tools can have a good win rate percentage and make us earn a lot of money. If you like this type of technical analysis videos, strategies for you to use in your daily trading, please hit the like button, which is completely free, and share the video with people who are interested in this topic. Without further ado, we started. First of all, what we have to keep in mind is that, as I was saying, it is an indicator that shows us a kind of prediction for what the price may do in the future. In this case, we are in hourly time, 1 hour, and on the SP 500 chart. And we can see that according to this indicator, we would have this structure from now on until approximately 2 days later, which is when this fractal could be repeated, which, as I said, has taken up reviewing previous parameters. This gray area, which also includes that green zone, would indicate the area in which the indicator has been working to finally give us this possibility. And after making a forecast, also taking into account the last candles in the structure, which would be this orange zone, this prediction has resulted in us. The indicator, as you can see, is called Echo and is from the creator LuxAlgo, who is quite famous on the platform and in the world of trading. And to search for it, you would simply have to go to Indicators, type Echo, and we would have it right here. We click on it. Its full name is the Echo Forecast by Lux, and we just clicked and we would have it already in place. Later we are going to complete our indicator with other tools, but first of all I want to explain to you how we should enter into our operations using only this indicator. And it's very simple. We see that the forecast is bullish, but we also see that first it is assumed that there will be a fairly sharp fall before the rise begins. Then of course, I personally, with my knowledge of trading, would not enter this area, but perhaps I would wait a little longer. And that can happen many times, especially during high periods with this type of prediction. That is why this indicator is more used in lower periods of time, for example in 1 minute, in 3 minutes, or even in 5 minutes. Here, for example, in 5 minutes we would have a fairly clear trading opportunity using this indicator, which basically what we would have to do is, in this case, we see that the prediction is bullish, we would have to make our entry directly at the point where we are, and place our stop loss a little below the previous low. As we see here, it would be approximately this area. Some people would place it under this red candle, but I specifically want to give it a little slower, to this area. We can see that it's a 0,12% stop loss, so we'd have to place our take profit at a ratio of 1/1.5. So it would be something like that. I mean, when we touch this area, we're more or less going to see it around here. The price would reach our take profit, and we would come out with those profits. As you can see, it would have been entered just now. We would already have this operation in a positive way. Obviously this can change, we would have to wait, but that would be how trading works using only this indicator. But of course, we can add a couple of tools that can help us improve our success rate. The first of these is the SSL hybrid, which is also a well-known indicator and which adds quite a few parameters to us. In configuration, in data entries, we would have to change a 60 that we have here to a 200, and in this tab we would put the McGinley option. We would go straight to style, where we would remove practically everything except the MA and the color of the candles. We uncheck the rest, and it would look something similar to this. Another indicator that we should place is the volume oscillator. In this case, I'm just going to change the color settings a little bit to make everything look a little better. With these two indicators in place, we will have a much broader view of how to carry out our operations. First of all, as always, the averages tell us a little better what kind of trend we are in. But the most important thing when entering into a trade of this type is that one or more positive blue uptrend candles touch the top of the orange box, which if you remember is the area where our main indicator took the most references to make this prediction. If we already have this first standard fulfilled, we must look for a second one, and it would be nothing more and nothing less than focusing on our volume oscillator. If the volume is above the middle part, that is, this area here, we could enter that long, because we expect that prediction to be fulfilled. But on the contrary, and as is happening right now, if the volume is below the midline, we should not take into account anything the indicator tells us, so this entry would be completely invalidated and we wouldn't take it. Obviously, you will always see that, even if we don't have that volume, the prediction will come true. But we're talking about improving our odds to make better trades in the long term. Therefore, by adding these two rules with these two indicators, we can ensure that in the long term we will have much more win rate than just using and following the prediction. We have here a very clear example in this area. Look at that. We see how the body of these 2 or 3 candles is touching the bottom of the area, in this case green. As I was saying, we just have to look at the red zone. But I want us to go a little further back, because before this area was green it was red, and at this point we had a prediction, and as we can see, surely that prediction would have been downwards. But we also have to note that just when that happened, the volume was at the bottom of our oscillator, so that prediction was invalidated. And as you can see, the price instead of continuing to fall began to rise again. So following these two rules, we would have saved ourselves a trade that could have possibly resulted in losses. In this case, on the Bitcoin chart, we can see that positive candle touching the top of our red square, and we also see that the volume is above that average. We also need to see that this moving average is positive, that is, we are supposed to be in a small uptrend, so we have everything we need to open a long, and our take profit would be put at a ratio of 1 to 150, which would be more or less around here. A tip if you use this prediction indicator with cryptocurrency is to adjust your stop loss a little more and at the same time your take profit. Because they have extra volatility, the temporal ranges are low, they can be quite manipulated or adulterated, as I like to call them. So doing a little more in-depth study of this small range, I would place the stop loss in this area, also reducing our take profit back to a ratio of 1.5, which would be more or less around here. And as you can see, it would come to play our take profit perfectly, very tight, according to the prediction. If you like the video, please leave us a like, which is completely free so that we can bring you the best content on technical analysis and profitable trading strategies. Remember that this prediction indicator has not yet been tested in the long term, so I invite you to share your experiences in the comments box. Thank you very much and see you in the next video.